While markets still expect the Fed to cut by a quarter point next week, my next guests say that's not the right move. One thinks a half-point cut is needed to prevent something from breaking, while the other thinks the Fed shouldn't cut at all, especially after the New York Fed reported inflation expectations 3 years from now have increased. I knew you might see that data point this morning. Joining me now, Mark Zandi, chief economist at Moody's Analytics, and Komal Sri-Kumar, president of Sri-Kumar Global Strategies. I saw that same release, and it was 1 year went up a little bit. I think maybe the 3 year was steady, but I'm thinking the 1 year went up to 3%, even though gasoline prices have dropped. What do you make of that?
Exactly. You have other factors, Kelly, which are influencing. Rent has been stubbornly high. That is one reason where it's coming from. Various areas of services are also contributing to inflation. And what I call this is whack-a-mole inflation fight. You hit one part of the sector, then the inflation perks up again somewhere else. And the reason is there is still enormous amount of fiscal stimulus. The monetary base, the Fed's balance sheet was doubled from already bloated levels in 2020 to 2022. And we haven't cut back very much since. So why are you surprised that inflation is still remaining high? There is a lot of liquidity. People have to spend it. And you see that in wage costs. The wage cost accelerated month on month as well as year on year. We see the initial jobless claims are down for the third week in a row. Unemployment rate is down. How can the Fed pretend that the economy is weakening and the inflation is coming down when you have so many of these danger signals? So I don't think the Fed is data dependent, Kelly. I think they make the data say whatever they want the data to say.
Mark Zandi, I will let you come in and answer those questions.
Well, a lot to unpack there, and I don't want to be too dogmatic about it. I mean, quarter point, half a point. I think it's key that the Fed starts cutting interest rates in a very consistent way. They've achieved their objectives. The economy's at full employment, a 4.3% unemployment rate. Inflation is back to target, almost anyhow way you want to measure it. Inflation expectations, at least as measured by most measures, bond market or consumer, are well tethered, and the economy feels like it's on the soft side, particularly in the labor market. You could see that in last Friday's jobs report. So, given all that, why I just don't see the argument for not cutting rates. But if it's a quarter point or half a point, at this point, I'm not sure that makes a whole lot of difference. Just as long as the Fed gives us a clear path to lower rates and getting that fund right back down to something that's closer to equilibrium.
And Sri, in fairness, maybe our friends in the back can queue up, Jack, maybe our break-evens chart to show the market's expectation of inflation over the next 5 years or the next 10. It's fallen substantially. I mean, it's practically below target because I think it tracks off CPI, but PCE runs lower. So point being, yes, consumers seeing, 3% inflation in the near term, but markets are seeing more like under 2%.
Well, you look at the 3-year and 5-year inflation expectations for the Federal Reserve Bank of New York that was out today, and you're at 2.5 and 2.8%. That is the last mile of the journey toward 2%, Kelly. Second, when this is happening, the president of that very same Fed, John Williams, said last week that he hasn't made up his mind how much to cut interest rates on September 18th. He's sure he wants to cut them. So there is a discord, there is a divergence between the Fed expectations and what is coming from the Fed officials. And lastly, there is still a lot of fiscal stimulus left. And the Fed is behaving as if monetary policy should be implemented without paying any heed to fiscal deficit. That has been Powell's position. That, to me, shows total ignorance of economic theory. And that's the reason why inflation has remained so sustained, with a monetary policy that is insensitive to what's happening on the fiscal side.